to the National Media Archive. To learn more or volunteer, go to nationalmediaarchive.com. Have you ever wondered how a handful of hackers could pocket close to $90 million legally? Well, they didn't. Today, we're diving into an audacious cyber heist orchestrated by Vladislav Klyushin, a wealthy Russian businessman and his inner circle. They didn't just break the law, they rewrote the playbook on financial cybercrime using sophisticated hacking tools and insider trading. They manipulated the stock market in ways even Wall Street pros could only dream of. But how did they pull it off? And more importantly, how did they get caught? Let's break it down step by step. Think about this. You and your friends start with $9 million, and thanks to stolen secrets, you multiply it tenfold. That's not just luck, that's grand larceny, a digital style. You might be skeptical. Maybe you're thinking, isn't Wall Street already full of risk takers and big winners? True, but this scheme relied on two technical terms: malware, malicious software that sneaks into computer systems, and insider information, which is non-public data that can move markets. Let's see how these elements combined for one of the biggest cyber scores in financial history. Picture this: a Moscow IT firm, a crew of hackers, and the world's biggest tech companies as their targets. The stakes, millions of dollars and years in prison. Sound like a movie? This is real life. Let's peel back the layers of this cyber onion, starting with the mastermind himself, Vladislav Klyushin. So, who is Vladislav Klyushin? He's not your run-of-the-mill hacker. This guy owns M13, a Moscow-based IT company that specializes in vulnerability detection. That means, in theory, they help clients find weak spots in their systems before real criminals do. But, as we'll see, sometimes those who guard the hen house are also eyeing the eggs. M13's client list is impressive. Even the Russian presidential administration. That's right. Putin's own office. Now, you might be thinking, if you're running a legit business, why cross the line? That's the paradox. The technical term here is a dual-use technology, tools or knowledge that can be used for good or evil. Klyushin wasn't acting alone. He surrounded himself with skilled associates, including some with military intelligence backgrounds. More on those guys in a moment. Let me tell you a story. Klyushin lived large, private jets, ski trips in Switzerland, but in cybersecurity, no fence is high enough. When he landed in Zurich for a holiday, the law was waiting. So what made M13 the perfect front? Their expertise in penetration testing, basically hacking with permission, gave them all the tools for unauthorized access, and they used those skills for a high-stakes form of financial cheating. Let's meet the rest of the crew. Among Klyushin's partners was Ivan Ermakov, a former Russian military intelligence officer. Ermakov isn't new to controversy. He was previously charged for hacking into Hillary Clinton's campaign during the 2016 U.S. election. Now he's back in the spotlight, this time for hacking with a profit motive rather than politics. You might be wondering, why would someone with a government background risk everything on a financial plot? The answer lies in two technical terms: cyber espionage and credential theft. These are skills honed in intelligence circles, but with a different payoff: cash, not secrets. The group's synergy was their downfall. With backgrounds in military strategy and cyber operations, they executed their plan with military precision but left a trail that investigators could follow. Imagine a team where one member knows how to break in, another knows how to cover tracks, and others know how to launder money. That's not a startup, that's a cybercrime syndicate. So, what exactly did they do? Let's follow their digital footprints into the heart of Wall Street's data vaults. The big question: how do you get tomorrow's headlines today? The answer is hacking into the digital filing cabinets of America's financial system. The group targeted two U.S.-based vendors who handled confidential earnings reports for publicly traded companies. You might ask, what's so special about these vendors? Here's where two key concepts come in: malware deployment, infecting computers to create a secret backdoor, and brokerage accounts, which are digital wallets for buying and selling stocks. The hackers used malware to scoop up employees' usernames and passwords, then broke into these vendors' systems. It's like making a copy of the bank's master key and letting yourself in after hours. Once inside, they downloaded yet-to-be-released earnings reports from companies like Microsoft, Tesla, and Ulta Beauty. They knew before anyone else if a stock was about to soar or plunge. This privileged information is what Wall Street dreams are made of, except it was all illegal. The conflict outsmarting security systems without tipping off the authorities. The resolution: they got greedy. And that's when things unraveled. So how did they turn stolen secrets into millions? This is where the term insider trading comes in, using non-public info to trade stocks before the news hits the market. It's illegal because it gives an unfair advantage, distorting the level playing field. Let's simplify. Imagine you know a company's profits are about to skyrocket, but nobody else does. You buy shares cheap, then sell high after the news goes public. That's profit, unearned and unfair. Now you might be thinking, don't regulators watch for this? Yes, but the hackers were clever. They used multiple brokerage accounts, sometimes even in their own names, to spread the trades and avoid suspicion. The technical magic lay in data exfiltration, removing stolen files without detection, and trade execution algorithms which allowed them to buy or sell stocks instantly after reading the stolen reports. In 3 years, they turned $2 million into $21 million, and a total of $9 million into almost $90 million. That's not just beating the market. That's rigging it. Now, how did the authorities crack the case? It wasn't luck. The U.S. Secret Service and FBI teamed up using a blend of digital forensics and the science of tracing electronic evidence and behavioral analysis, which profiles how criminals operate online. Investigators spotted a pattern: trades executed seconds after confidential reports were uploaded to the vendor's systems. Too quick for coincidence. Let me tell you a behind the scenes secret. Every click, every file download leaves a digital fingerprint. Even the best hackers can't wipe all their tracks. Now you might be saying, but can't hackers use proxies or fake identities? They can, but cross-referencing timestamps, IP addresses, and trade histories gave law enforcement the smoking gun. The setup, a high-tech chase. The conflict, hackers versus investigators. The resolution, an international sting operation that would make any spy thriller blush. Here's where things get cinematic. In March 2021, Vladislav Klyushin flew his private jet to Switzerland for a ski holiday. But what he didn't know was that Swiss police, acting on a U.S. extradition request, were waiting at the airport. You might wonder why Switzerland, the country's strong banking laws and international connections, made it an attractive but risky destination. Two technical terms here: extradition treaty, an agreement to hand over fugitives, and Interpol notice, which is a global alert for wanted criminals. As soon as Klyushin landed, he was arrested. Suddenly, the hunter became the hunted. The conflict trying to fight extradition from one of the world's most neutral countries. Let me paint the picture. A billionaire expecting a week of luxury finds himself in a Swiss jail cell awaiting transfer to the United States. The resolution: after a lengthy legal battle, Klyushin was flown to Boston to face trial. The stage was set for a courtroom drama. The trial was a spectacle. 3 weeks of high-stakes legal chess. The prosecution, led by Assistant U.S. Attorney Stephen Frank, argued that Klyushin and his team had cheated the system, turning small investments into massive windfalls using stolen data. You might ask, did the defense have any real arguments? Klyushin's lawyer, Maxim Nemtsev, claimed there was no direct evidence his client ever saw or used a stolen report. Instead, he insisted M13 simply used media monitoring and investor engagement, perfectly legal methods. The technical terms at play: wire fraud, using electronic communications to commit fraud, and securities fraud, manipulating stock transactions with false information. The conflict: was this a case of clever investing or criminal conspiracy? The resolution: the jury didn't buy the defense. On February 15th, Klyushin was found guilty on all charges. Let me tell you, the verdict sent shockwaves through both the cybersecurity and finance worlds. Even high-powered lawyers couldn't save him from the mountain of digital evidence. So what happens after the gavel falls? Klyushin faces up to 30 years in a U.S. federal prison, with sentencing set for May 4th, 2023. That's a lifetime for someone used to luxury. But the story doesn't end there. His legal team plans to appeal, arguing that the prosecution relied on untested legal theories. The technical terms here: appeal, asking a higher court to review the decision, and precedent, meaning previous rulings that guide future cases. Now, you might be wondering, could this case set new legal standards for cybercrime and insider trading? Absolutely. If the appeal reaches higher courts, it could rewrite how digital evidence is handled in financial cases. But for now, Klyushin is a convicted felon, and his associates are likely facing similar fates. The risk-reward calculus in cybercrime just changed. Let me close this chapter by saying, even in the digital age, crime doesn't pay, at least not forever. What can we learn from this case? First, no system is bulletproof. Even the biggest companies and secure vendors can be breached if attackers are persistent and skilled enough. It's a wake-up call for the world of cybersecurity hygiene, the regular practice of updating, patching, and monitoring systems. Second, market integrity depends on trust. When that trust is broken, everyone pays the price. Investors, companies, and even ordinary workers whose retirement funds are at stake. Let me ask you, if you were running a Fortune 500 company, what would you do to protect your crown jewels, your confidential data? Multi-factor authentication and real-time monitoring are just the start. Now, you might be thinking, is it even possible to stop every threat? The answer is no system is 100% safe, but vigilance, transparency, and rapid response can make all the difference. In closing, this story is a stark reminder: in the cyber age, the line between opportunity and crime is thinner than ever. Stay smart, stay secure, and keep your eyes on the headlines, because tomorrow's story could be unfolding right now.